Let's go ahead and open up this trading day to wrap up the week and invite in Brian Hoops of Midwest Market Solutions in Springfield, Missouri as our guest analyst, and we'll take a look at our corn market first. And on the corn, as we go to the big board in Chicago, we'll look first of all at that March contract. It is 1 1/4 higher now at 3.80 1/2. We have December just barely higher, only 1/4 cent to the plus side. It's trading at 3.90 per bushel. And so that's how it's opening up. It's been led by the nearby contracts, if you can call it that, with about a penny more than the deferreds. All right, let's look at our soybean trade. Soybeans are actually opening under a little pressure here this morning. March down 3 1/4. We're at 8.77 3/4. And we have the September down by 4 cents this morning on the open. November down 3 3/4 at 9.16 1/4. And as we move on and take a look at our wheat market in Chicago wheat, we have that March contract just a 1/2 cent higher at 5.56 3/4. Remember, we had a lot of pressure yesterday in the entire wheat complex. On the Kansas City market here this morning, we have that March contract trading a penny higher. We're now at 4.68 3/4. And Minneapolis wheat kind of following suit with Kansas City. Showing a very small gain, but it's up about a penny and 1/4 on the nearby March as well. Brian, how do you read the tea leaves here on this grain market as we head into the weekend? It seems like everybody is just kind of biding their time, waiting on something to happen with Chinese business here.
Yeah, exactly. It's very, very quiet. Some little choppy trade going on. We had the pretty big profit taking overnight in Malaysian palm oil futures, and that's spilled over into U.S. soybean oil. So that market's pulling back here ahead of the weekend, and that's dragged soybeans down along with it. Soybean meal had an outside day higher yesterday, so there's a little bit of buying interest in that versus the bean oil. And the corn and the wheat just kind of bouncing here off of some support, trying to find, a reason to rally, and it's hard to find one. We haven't had any private export sales for corn for over a week now, so our sales numbers were good yesterday. They look to fall by next Thursday's weekly export sales number. The supply and demand report out on Tuesday, however, should give us a little bit of support. Trade's looking for ending stocks to be lower for corn, soybeans, and wheat, and could give us just a minor bounce. But there's just not that much upside potential here at this time.
In that upcoming USDA report on Tuesday, they will include numbers for Brazil and also Argentina production, and it looks like the average trade guess for Brazilian corn production is going to be hovering around 100.8 million metric tons. And for Brazil, soybean production, 123.8 million tons. Now, what do you think about those numbers? Are you in line with that?
Yeah, we're very close to those numbers as well. We think these production numbers are going to be this large and may even grow as we go into the March report. So there's some some pretty big estimates out there, and from by all accounts, what they're harvesting, especially in Mato Grosso so far, have been living up to those expectations.
How would that compare to a year ago for production, though?
Well, this would be like an all-time record for Brazil's production for soybeans. The corn number may not quite be a record, but it's going to be larger than year-ago levels, and certainly larger than 2 years ago when we had a kind of a drought-hit Argentina corn areas. That really allowed the U.S. export market for corn to improve in through the spring and into the summer. This year, that's not going to be the case, unfortunately. It looks like they're going to have a pretty good-sized crop as well, and that's going to undercut our prices for both corn and soybean exports.
We were talking earlier about the big jobs data that came out this morning showing much higher than expected jobs production last month in January. And we're going to see if that has any impact here, perhaps, on the livestock trade. We're talking with Brian Hoops, and we'll consider that when we come back. Let's open up our livestock trade today on a Friday, and we go to live cattle first. Let's take a look at the futures in Chicago, and on the live cattle board, we'll go ahead and take a look here, first of all, at the April contract. Let's go with that if we can. Right now on the April contract, it's showing a loss of roughly 25 cents as it stands right now. So a little bit weaker start. It is now down 22 at 119.53. Brian, your take on this? It's not down very much, but it doesn't seem to be getting a lot of support either from that jobs data that came out. They came out with, what, 225,000 jobs in January when they were looking for 160,000?
Yeah, it's a sign of a very strong economy, and that's going to have an impact. The Dow is selling off. It's probably some profit taking. We had a sharp drop last Friday, and then the market had just such a huge rally this last week. You could expect a little bit of a setback or profit taking, even though this news is good. But what this will impact as much as anything is the U.S. dollar index. When the United States has a strong economy like we have, foreign countries, other countries will be looking to buy U.S. dollars. And there really is not another country in the world that has such a strong economy. So, unfortunately, that's going to give strength to the dollar index, and that's going to hurt our exports of beef and pork.
On the feeders, let's roll over there and take a look at that feeder cattle market this morning. And it's kind of mirroring the action that we are seeing in the live cattle market. We're lower across the board by a similar amount. We have the April contract 30 lower now. We're trading at 137.28 per hundredweight. The deferred's a little weaker than that. September is down 60. And then lean hogs, of course, yesterday everything closed limit up outside of the February contract. And it looks like we are higher again today. The May contract gaining 98 cents here this morning. It's 74.28. So a firmer tone, but they are in expanded limits, and they're not really using that by any stretch here in the early going.
No, they're certainly not. We did have a gap higher on the opening this morning, and we had a few gaps lower last week. And so you can make a case that there's an island bottom on the charts. Like you look at the April contract, you can see that's usually an indication of a market that's trying to put in a bottom anyway, one of the more reliable technical indicators. So, there's some positives coming out of this hog market. Some of the news is kind of friendly as far as our exports go, and hopefully we can follow through with that and ship a lot of pork and not just put these sales on the books and not make the shipments. So hopefully China does come through with that.
All right, very observant. Thank you, Brian. I appreciate that. And Brian Hoops of Midwest Market Solutions in Springfield, Missouri. Wow, island bottom. I haven't heard that term in a long time, Janet, so we'll see if it applies here in the hogs.
All right, as always, thank you guys very much.
You bet.